Financial broker, and I work for Evolution Financial. And you're probably wondering what the heck a financial broker is. I do anything from debt consolidation to investments to life insurance to child wealth plans to retirement plans, tax saving strategies, and estate planning. So I do a variety of things and I help people shop around the market and I get them the best product because Canadians are needing this nowadays. And with this information age, we're able to provide that access. So I'm going to share with you a little presentation today and just share what I can provide for you and see if there's anyone you know who might be interested in this information. So you can see my screen here. So like I said, I work for Evolution Financial. Here's my information up here on the top right. And one of the main reasons I'm so passionate about this is because we have a really big problem here in Canada. And this is it right here. 91% of Canadians are retiring at or below the poverty line. Makes you wonder why. I mean, we probably have quite a few answers, but what our research and our experience has found is that it's actually the lack of education. So, where do you go nowadays to get information? Where do you get your financial education from? You go to maybe an old bank that is running the old system, or maybe Google and AI. And how beneficial is that? So why is it that out of 10 Canadians are failing? Partially because of that education, and the other part is because there's a lack of access. So today, in this day and age, with licensed advisors like myself, which is relatively new, we are able to shop the market and actually find the best products for people and use the strategies that the wealthy have been using for millennia. So, in that, our biggest value is providing that education and that access. So, what we focus on is eliminating debt, protecting income, making your money work a lot harder for you. I wish I knew this when I was 20 because I would be a lot further ahead than I am now, that's for sure. And having the access with our licenses, we're licensed with the government of Canada. We can provide access to the products. Like I said, the strategies that the wealthy have been using for millennia. This has been around. It's nothing new. It's now that we just have access. So traditionally in Canada, what we would do is just go to one bank, put all your ducks in one bank, put all your pennies there. And most people weren't satisfied enough. And unless you were really wealthy, you could go elsewhere. But usually it's you have all your money in one place. And the best thing that we can provide is shopping the market for you and providing different options and comparing prices. This is being able to work with multiple providers. And what we've actually found is that we can bring more cash flow to people on a regular monthly basis by reviewing their full financial analysis. So we help people get educated because we now have the information that we can share with people, which I'll share with you in this presentation if you wait until the end. We get to shop around. Like I said, that's only a small portion of the like 100 companies that we actually work with and work for. And we look at the big picture. And the best part about this is that it's at no cost to you because all the companies that we work with and we work for, they actually pay us and they pay us well. So we can provide our educational services and our service to you for free. So that's one of the best benefits. What I'm going to share with you next is just how this industry has changed the future and that this is the future. So you've all heard of Uber, one of the world's largest taxi companies and now food distribution companies, and they own no vehicles. Same with Airbnb. They own no accommodation, but they're one of the top companies to go to when you're looking for accommodations. Same with the company that created us. So World Financial Group is the mother company who is a part of Aegon, which is a larger company that owns around $40 billion in assets. So they're actually based out of the Netherlands. They created us, which have created different franchises underneath of them. But the best part is that this is one of the world's largest financial services distributors, and we own no financial products. We're not selling anything. We're literally shopping the market. It's our access. It's kind of like realtors, how there's different companies, but they access the market. That's kind of what we are. The best part about this is not only can you make money in Uber if you get the right licensing and licensed products, um, or certificates. The same with Airbnb. You have something that you can provide and you access this. Same with World Financial. We have the ability to build agencies underneath of this, and it is definitely the revolution of the financial industry and the way that the future is going. So one of the main reasons that this company is so powerful is because we focus on no family left behind. And what that means is that we align with our own personal values and ethics in providing every family with the best education possible. And then they can make the decision. They can decide once they have that information. And that's where I come in today, just to share some education with you and see if this is a fit for you as a client or as an agent if you're interested in the business and making money as you go. That's an option as well. So one thing that we're going to go over is what is a fin? Good question. What a professional money manager is, how compounding interest works, and what are the options to grow and build wealth in Canada. So these are things that literally should be taught in high school. Okay. So I was forever grateful when I found this information out because I literally have been searching since high school to learn this and I would have been way further ahead. I'm grateful now that I know, but let's go through them. So what is a FIN? Financial independence number. So what does that mean? So it's your blueprint to retirement. So what we do is we use the analogy of Google Maps. So just the same as when you go to Google and you're like, I want to go to Walmart or I want to go to the bank. You type in the end destination of where you want to go, and Google reverse engineers the steps for you to get there. We do the exact same thing, except there's one key thing that no other company does is we find what your financial independence number is. And what that is the number that you need to live off of in retirement while not depleting the money that is in there. Sounds too good to be true, but reach down. I tell you, I swear on my life, this is the best thing that has ever happened to me. And it's really put the end in sight, and you can actually achieve your goal. So, what we're going to go through right now is accessing professional money managers and understanding what they are. So, when you go to the bank takes your money and they invest it. So, they take it and they invest it and they send it out, they offer, they loan money out. So, they make money from our money being in there. So let's say they give you like a 4% rate of return and they take their money and they get around a 15% rate of return, which is an average of what the bank gets because we know with credit cards they're getting like 21%, 22% nowadays. So what we do is we try to cut out the bank because as soon as you take out that money, they have to take it from the professional money managers. So we try to cut that out and get you with your investments getting the rate of return that the bank would be getting. And I'll show you an example in a second. But first, we need to understand compound interest. I call this the snowball effect. The more you push the snowball, the more that it grows and it gets bigger, right? So Albert Einstein was actually the guy that discovered the rule of 72. This is something you have to remember. It's so key. 72 divided by the rate of return gives you the number of years your money will double. This is going to all make sense on the next slide. So like I said, Albert Einstein discovered this. So let's take an example of you going to the bank, you're putting in, let's say $10,000 and they guarantee you a 4% rate of return. So what we do is we take 72 divided by 4. It gives you the number of years that your money will double. So that's 18 years, as you can see down here. So at age 29, somebody goes into the bank, they put in $10,000. And 18 years later, if they don't do anything, they leave their money there. 18 years later, their money will double at age 47 to $20,000. 36 years later, which is your money doubling twice, they'll have $40,000. It's amazing, right? Honestly, you just leave your money in there and it's going to grow. So at the end, when they're ready to retire, they have $40,000. It's not enough, right? So let's use a very, very generous number here. And we'll use 12% as a rate of return that the bank is getting on the money that you put in there. And you'll see that 72 divided by 12 is 6. That's substantially different than the 18 years that you had over on the left-hand side there. So same person takes their money to the bank, $10,000, they put it in, they do nothing. The only thing that is different is the rate of return, 12%. Okay. So after the exact same 36 years, your money is in the same place. The bank is just getting a better rate of return on it. And at 65, 36 years later, they have made $640,000 from doing nothing. Nothing. It's literally just sitting in there. It's growing. It's in the market. It's growing. And so do you think the bank is going to care if you pull out $40,000 or not? No, most likely not. And that's why the bank is, we want to cut the bank out. It's kind of eating away at your investment. Okay, so just to recap, we just went through what a financial independence number is and how important it is, what professional money managers are and why we need to go directly to them and not use the bank for that, and what compound interest is and how important it is if you have any money sitting anywhere that it should be growing for you and with you. Inflation doesn't stop, and you'll see the value of money is changing over the years. Okay, now we're going to go into the 6 vehicles of investing in Canada. Okay, so we're going to start with one of the most common ones people know about, real estate. And this has been doing really great over the last few years. So the difference is that bank has control, it's equity, and it's not savings. So you have to sell to have access. You can't really sell your door if you need extra groceries that month. And it's sometimes can be challenging to get a HELOC, depending on how much you need and when you need it. And so there's different ways of leveraging the money that is in your home. But if it's sitting there and it's doing nothing, then you really have a hard time accessing it. And it really depends on all the factors, right? So just remember that the bank is equity and it's not safe, or sorry, the home is equity and it's not savings. Okay, next vehicle of investing in Canada is RRSPs. You probably have some of these and you've probably been sold them from the bank or from your work. There are some benefits to it, like a minor tax deduction annually. And there's different vehicles for that. So like RRSP, RESP, or DSP, if you've ever heard of any of those. So there are contribution limits to it. There's also discipline required in order to set these up. And it's taxed. It's taxed at the end. It's basically tax deferred. So it's 100% taxed later. So I wanted to show you a visual here. Let's say you put in $50,000 of technically pre-taxed money, and it grows $50,000 in here. When it's $100,000 hypothetically, we'll just say like when you're ready to take it out, all of the money is taxed. So all of the money that just grew in here, tax deferred or tax free during that time, is now 100% taxed anytime you want to take it out. And one thing that they don't tell you at the bank is that if you try to take this out ahead of time, there's a withholding tax. So you get taxed on the money that you want to take out. Also, is that the bank doesn't tell you that you're forced to take this out at a certain age. At age 71, the government actually and the bank require you to take this out so that they can get their taxes, their money from it. So they don't want it to continue growing in here. And I have a story that I can link to you later about someone in Ontario who felt like the government took advantage of her parents because they took half of the RRSPs when they passed away. Another story for another day. Okay, so another vehicle of investing in Canada is a non-registered account. This is already better than an RRSP, believe it or not. We've been sold this is not an avenue, don't do it, but it's actually already 100 times better than an RRSP. The reason for this is because there's no limits of how much money you can invest into it. There are potential tax deductions depending on the strategies you use to actually grow the money in there. And the capital gains tax is not as scary as people think. So I'm going to show you an example here. So $50,000 visually, this is of already taxed money. The money grows in here another $50,000 hypothetically, and at the end of the year, you've got $100,000. Okay, so you went from 50, you have 100. Now you're only taxed on 50% of the gain. The gain is only 50,000. Okay, so 50,000, only 50% of that gets taxed. So realistically, 25,000 goes into your income for the year. So the highest tax bracket is 53% in one of the provinces of Canada. Okay. So now only 50% of 50% is being taxed on the money that you've earned growing. So this is substantially less taxes than you would get on your RRSP. Okay. This is huge. I know it takes a minute to absorb it. So 50% of 50,000 is 25,000. And then 50% of that, because it's going to go into your taxes as income, it's only 12,500 that gets taxed. Okay. This is a big earn for the year, right? And so this is just more of a like a long-term view of this, but we can look at it in many ways. But really, only a quarter of what you've earned by doing nothing is going to taxes. So it's a little bit of a scare tactic, but this is already 1,000 times better than what we had back into the RRSPs of 100% being taxed. See here, 100% taxed as soon as you take it out. Over here, it gets taxed basically a quarter of what it got, what you made. Okay, next one. Tax-free savings account. Okay, this is one of the best things that the government has offered, except there are limitations, of course. So the contribution room, it carries forward, which is fantastic, especially for anyone who's in their teens. I think this should be taught to every teenager that as soon as you can put the bare minimum, which is around $7,000 a year, into your TFSA, put it there and make it grow. And there's an illusion here, tax-free savings account. It's actually an investment account. A lot of people don't have this invested. There's no tax liability for this. There is a contribution limit, like I said, but your money grows tax-free in here and you can take it out at any time. There's no limitations to that. So zero taxes. We always suggest maxing this out to the highest possibility. This is the one area that you should be maxing it out to an extreme and then looking at other avenues. And so key for kids. As soon as you start working, make sure your kid is putting in like $500 a month. I mean, it's nothing to them, especially if they're not paying rent. Okay, rant over. Next vehicle is the first home savings account. This is available for first-time home buyers. The eligible contributions are tax deductible, similar to an RRSP, as long as your child or this person knows that they will be buying a home in the next 15 years. So there's tax-free withdrawal for a home only. There are annual contribution limits. Right now, it is still fairly new. I think it's about 2 years old now. The maximum you could put into it is $40,000, but it's better than nothing, especially if you know you're going to buy a home. That way you don't have to pay it back to your RSPs. So this is for people who are looking to buy a home, their very first home. It is one of the best avenues to invest your money. Okay, the last but not least is one of my favorites, the permanent tax shelter. A lot of people do not know about this because this is one of the strategies that the wealthy have been holding on to nice and close to their hearts and to their families for years. And now we have access to it. So, permanent tax shelter, what is it? So, it's where an investment company and an insurance company actually come together. And they created this, like I said, over 150 years ago. So it's been around for a long time, but it's new to a lot of our ears. So I'm going to use the analogy of an orange. So we all know oranges are so juicy on the inside and they taste terrible on the outside. So in order for the orange to grow, the peel on the outside has to protect everything on the inside. So that's the same of how this works. And that's why we're using this analogy. There's insurance. The insurance company holds on the outside just like the peel, kind of like the security guards, and the investment goes on the inside. So there is a portion of money that will go to the insurance, your security team, and another portion, a larger portion of the money that will go right into the investment and allow the fruit to grow. So there are about four different strategies in this avenue. And I'll let you know that there is some that are easy to just obtain immediately, and I can help you with that. But for most of them, it is a privilege to own and not a right to have. So there are some qualifiers in this. And so it is a conversation that we can have together one on one, but this is one of the best avenues for growing your money tax free. This actually bypasses probate. If you don't know what probate is, it's basically when you die, the government wants half of everything that you have, basically. They want to get their fair share of their money. And this is something that bypasses that. So it goes directly to whomever the beneficiary is, whether that's a family member, a charity, friends, it can go anywhere. And it goes tax free, like I said. It also is creditor proof. So no creditors can come after this if you have any outstanding debts. It is amazing for your kids. And basically, it, like I said, it grows tax free. It's the best benefit. It's a legacy builder. And this is, like I said, what the Rockefellers have been doing for years. And there's different ways of utilizing this and leveraging it while you're living today, and being able to use the strategy of infinite banking as well, if you've ever heard of that. But that's a whole other conversation for another day. I know this has been a lot of information for you. And so we're going to review them and just so that you can see them side by side. So real estate, it's harder to access the funds that are in here. And it really depends on what the market's doing. So right now that we know the market might not be that great here in BC. And then we look at RRSPs. This is our least favorite and it's the most sold. But it gets 100% taxed at any point you want to use it or when you die. So it at the highest tax bracket, like I said, that's 50%. So 50% of your RSPs go to the government. Non-registered funds are already 1,000 times better because they only get taxed on 50% of the gain, okay, of the gain that your money grew while you were doing nothing. So it's basically you're getting taxed 50% on that. Essentially, you're getting taxed a quarter percent on that, but for understanding the strategy, its capital gains tax is 50% of what the gain is. So TFSA, this is the best strategy that the government allows. There are contribution limits, but it does carry forward, and this is one that gets zero taxes, zero, zero. First Avenue should always max out. First home savings account, fairly new, really, really great if you're going to buy a home. And like I said, it comes out tax free. Permanent tax shelter, this is the best of the best. It provides protection and investment tax deferred growth, which basically means that it's growing tax free in there and you can leverage it until the day you die, basically, and you can still grow money while you're borrowing against it. So that is the end of my presentation. If you're interested in learning more information and also getting your financial independence number and learning what that is in more detail, like I said, it's complimentary for you to sit down with me and learn a little bit more and get a review. It's really get a review of what you have already and see if there's anything that was missed and see if there's anything that can benefit you and your family. Anyway, I hope you had a great time learning lots of information here. I'm sure you do have questions. So never hesitate to reach out to me and send me any questions you might have. And like I said, we can sit down for a one-on-one and you can learn some more. Anyway, I hope you're having a great day. Thank you for watching. Bye.